Hey guys, Ethan here. Today we're gonna talk about extending your loan tenure when you refinance, whether you should do it or not. Why should you extend your loan tenure? Shouldn't you be clearing it as fast as you can? Okay, here's my advice. When you're able to refinance and you're given a choice, always take the maximum loan tenure. And here is why. Number one, it is a very huge advantage to be able to borrow at less than inflation rate. Number two, especially when you use CPF charges you an accrued interest. Alright? On top of that, right, CPF monies that are not in CPF do not get that 2.5%. So 2.5 plus 2.5, that gives you 5%. However, this money that you're paying for the accrued interest still belongs to you. So minus another 2.5%. Net, your cost of borrowing, right, from CPF is still 2.5%. Number three, it lowers your monthly installment. Okay? So as you drag out the loan longer, your monthly repayment goes down. Correct? So to explain this, let's get into the numbers.
Okay, so as always, go under Excel, go under New, search for a loan calculator. Okay, you'll be greeted with all of this. I like to use this. For today's example, we will be using $1 million. This will be at the interest rate of 2%. We'll use this as a benchmark. Okay, let's say you used your loan for 5 years already. Your loan is now 25 years. The monthly installment, this is your principal and this is your interest. Once again, we will use the 12-year mark as comparison, so let's just highlight that. 25 years and 30 years. And that will be over here. Okay, now that we have the numbers, right, we're gonna take the 30 years, minus away the 25 years. Every single month you'll be saving 542, correct? Most of it, right, comes from principal. You will be paying $552 lesser principal, and the reason why this is so is because you will be paying $10 more interest. However, in finance, what we want to do, right, we want to annualize every single thing. Okay, as much as possible, we want to talk in terms of per annum. What this means, right, is you'll be paying $120 extra so that you don't have to pay back $6,628 worth of principal. Therefore, your net amount that you will be paying lesser, right, will be $6,508,
which is quite a lot of money, but not every one of us got $1 million loan, agree? So let's say if your loan is 500k, you take 0.5 times this number and you should get a rough number. Otherwise, just go into the Excel lah. So how long is your maximum loan tenure? There are two conditions. The bank will take the lower, but let's talk about the first one first, okay? Which is 75 years old minus weighted average age. Okay, this weighted average age is determined by income. Let's talk about John and Sally. Okay, John is 35 years old. John earns $7,000. So we take 35 multiplied by $7,000, right? Plus Sally's income. Sally is 30 years old and she makes $5,000. So you take that number, divide by how much they earn in 1 month, which is $12,000. Okay, so when you do this, you will get this 32.92. Okay, this is very close to 33 and the banks will access it as 33. So we take 75 years old minus 33, you get 42 years. This is condition number one. Condition number two will vary for HDB and private. For HDB, they will take 30 years minus the age of the loan, so how long you have already taken up this loan, minus 1. And for private, it will be 35 years instead. Okay, so in summary, today we've learned why you should increase your loan tenure. We have also learned how long you can increase your loan tenure until. Okay, so if you need help with any of these, you can reach me at unbeatable.sg. If you got any questions, comments below. If you learned something today, like, share and subscribe. I will see you guys in the next one.